Market Musings podcast with Fairbairn and Russell. Well, hello and welcome to the Market Musings podcast here from Stockbox, where today our guest Charles Archer, also known as That Stocks Guy on Twitter, is joining us again. It's the second time. How are you doing, Charles? Thank you for joining me today.
I'm feeling great. Went surfing all day yesterday in the rain because it's August, obviously, in Devon, and now I'm ready to start work again.
Excellent. Yes, well, I think the weather's been a little bit unfavourable, hasn't it? Certainly for me as well. Very wet over in the Netherlands for the last few days. Today looking slightly nicer, but today we're not here to talk about the weather. That's not what we're here to do. We're here to talk about the stock market, and we're going to cover three companies: PREM, African Minerals, of course, lots of coverage with that on Stockbox, Kodal Minerals, and Greatland Gold as well. But before we get into those three stocks, I thought we could perhaps just carry on a little bit from where we spoke last time about general sentiment, general risk in the market. I know one of the key things that you mentioned last time was with the interest rates. A lot of money has actually gone out of the markets and into banks because you can get a decent annual return now at basically zero risk. So, but we were talking before we came on air, and I wonder if you want to just carry on what you were telling me earlier about now why you feel perhaps the bottom is in, particularly in small caps.
Well, it's I think one of the things when you're analysing small caps, a lot of people ignore the macro picture, so the interest rates and inflation picture. If you look at the US, which kind of leads the world in terms of monetary and fiscal policy, inflation has gone down to 3%. The interest rates are very close to peaking at sort of between 5 and 6% federal funds rate. So over the past year or so, you've had the situation where interest rates have been rising, so money has been leaking out of the small cap market, because people would rather get that lock in those high interest rates, bonds or saving accounts at banks. And now the interest rates have nearly peaked. So the market, in my view, is at or very close to the bottom, because individuals who want to lock in their money into safer investments will have done so. And the share prices and the market caps of FTSE AIM companies, for example, are lower because they've already now priced in or reflected the fact that the interest rates are higher. So my opinion is that going forward into going into Q4 2023, the interest rates are going to be at their peak. The share prices of the growth stocks are going to be at their low, and then you're going to see a massive amount of growth and a lot more liquidity returning to the market. On top of that, because of the way monetary policy works worldwide, there are plenty of people, and I include myself in this, who saw that even though there are a couple of very strong, unique opportunities, the small cap market as a whole was going to go down in 2023. And therefore, the best thing to do was to hold on as much cash as possible, allow it to grow using high interest rates, wait for the bottom, and then buy a lot of shares at the bottom of the market, which is what I'm planning to do and what I suspect a lot of other high net worth investors are planning to do. So that's where I think we are on the macro scale.
Okay, so you say you're planning to buy. Does that mean you are still waiting to pull the trigger?
So the shares of companies that I've covered pretty heavily, like PREM, African Minerals, like Kodal, like Greatland, I already have quite quite large positions. But I have a fair bit of cash held back, which I'm now waiting to decide whether the bottom is in, whether it's going to be a few more weeks away. I suspect, when you're looking at the larger market, it's going to be for the rest of August, it's going to fall a little bit more. It's simply because it's August, it's summer, people tend to sell and go away. August tends to be a weak month for stocks. First half of September is generally quite weak as well. And then kind of mid-September, that's when I'm going to be buying a lot, I think, if everything goes according to plan. But, you never know. The problem is, obviously, I'm talking about small caps in general with specific companies like PREM or like Vast Resources. There's always, if you've got one catalyst, and what the rest of the market is doing is kind of irrelevant. But when you're looking for the best opportunities at the best prices, then it can make sense to wait until the market bottom is in. And this is what I try to do with PREM African Minerals, for example. My initial buying point was 0.03p when there was absolutely no hope in the market and everyone was miserable and that particular company wasn't doing very well. And that's what I like to do. I like to find the most undervalued, underappreciated companies, buy them at the very bottom, wait 5 years and sell them at a profit. And that tends to work well for me. Occasionally I just lose all my money. Doesn't happen often, but it does. Because obviously when share prices are really depressed, often it's for a reason. But as a general rule, when you're looking at a mining company and it's got a great deposit, for example, and you've got a competent board and there's a little bit of cash at hand, then it's not the worst idea to just go all in when it's at its bottom and just wait.
And is that the opportunity you saw in PREM when you bought at 0.03? You saw a project there that had a good resource, or was it a bit of a risk one for you?
That was a risk one. I think this is long before Zulu or the flagship lithium project was a twinkle in George's eye. But my basic perspective on it was that unlike many other people, I think George Roach is a great CEO. I think he knows exactly what he's doing. He's a wily fox, as I've often characterized him, from Fantastic Mr. Fox. And I felt that putting investment and trust in him at that point at a low in the market was the way forward. Okay. And it's worked out pretty well for me so far, even if it's been extremely volatile.
Oh, yes. Well, it is.
Stressful.
It is quite a volatile stock. We will talk about that in a few seconds. But just to summarize, you're basically saying that the risk has come off the table due to higher interest rates, the cost of living, that kind of thing. And
I think we're at the peak. Is essentially the interest rates have gone to their peak or close to their peak, so the markets have recalibrated around that.
Okay,
and therefore you're now very close to the bottom of the market, the wider market, that is.
Okay. And you will never be able to call the bottom exactly, will you? You will never be able to say this is the day.
No, you won't.
No.
Okay, so I'm more than happy. There's two companies I put moderate investments into: Arc Minerals and Tertiary Minerals, and they're both going after copper in Zambia. And I think I'm sort of 30% down-ish on both of those companies from when I invested a couple of months ago, because I felt that was on the bottom and it wasn't.
Okay.
But the UK has just signed an agreement with Zambia to essentially dig out some critical minerals and provide some investment, is how I read it. So I suspect those are going to shoot back up fairly shortly. I think the thing is, when you're trying to call the exact bottom, especially when you're talking about AIM shares, it's very rare that you'll pick it exactly perfectly. So you have to accept you're going to have paper losses for for a time until the profits come back in. And the problem is that if you go, okay, well, what I'll do is I'll wait for the share price to start rising, because penny shares are so volatile, you might have a day or two or even a couple of hours before something that's trading at 0.2p goes to 0.5p. So I think it's the case that you do have to accept there's going to be masses of volatility, and you do have to accept that almost all of them are extremely high risk. The way I offset this personally, I invest a decent chunk of my excess income into an S&P 500 tracker in my SIP. I buy a little bit of gold. I invest a very small amount into junior ISAs for each of my 3 children. And then that way I can tolerate the risk, because if my entire FTSE AIM and FTSE main market portfolio went to zero, it wouldn't be the end of the world. But fortunately, I don't think that's going to happen, because I do a lot of research into these companies, and I'm very careful with which ones I pick.
Indeed, you do a lot of research. I've seen lots of written pieces coming from you with regards to Premier African Minerals following my visit as well, which of course attracted a lot of attention. But of course, PREM is everyone's, I like to call it everyone's favourite trading share. It's been around for a long time, as you said.
Indeed, it has.
I don't think you said it, but people do have a love-hate relationship with George. I personally, like you, do respect George. I think he's a good CEO. He's very shrewd. I'm not old enough to know any of his past business dealings, let's say. I can only judge him on what I know, and I rate him quite highly. But of course, there's a lot of shares in issue, isn't there? And that's also why I think that the share price can be so volatile. And it did pull back, I think, just to about 0.28, was it, or 0.3, just a couple
I think it went even lower than that.
Even lower than that.
Ago, yeah.
I was on holiday in Spain, and I missed it. Otherwise, I probably would have pulled the trigger on that. I was woken up early by PREM having to do an interview, but I wasn't actually able to pull the trigger properly, because that would have been a great buying opportunity, I think. I mean, personally, for me, I don't hold shares, but I don't have any concerns about the long-term prospects of PREM. They've fast-tracked this plant. Yes, there are teething problems, which has got to be expected.
Of course.
And yes, it's frustrating if you've bought shares, when you got all excited around 0.8 or 1p. Yes, I can understand that's frustrating for shareholders. But I just say hang on in there, because unless something, it's not without risk, obviously, but
No.
I think a lot of it has been significantly de-risked, and the shenanigans, let's say, that are going on between Canmax, Stark, and PREM, it's kind of jostling, it's kind of games between all three, I think, to protect their position and their interests, and rightly so. You would do that in your position, but generally, I would say that company is. It's not without its risk, but it's got significant upside potential, I think. But I'm not here to lament about it. It's your job. You analyse these companies. So go and tell me, tell the listeners what your take is.
Well, my take is pretty simple, which is that when Canmax decided to vote to try to remove George Roach, the CEO, and to vote against the extra issuance of shares and to pull the plug on their deal, almost all of that, and I'd say almost all of that, is just negotiating tactics.
Mm-hmm.
In their own equivalent of the RNS on the Shenzhen Stock Exchange, they made it clear that they were retaining the rights to the lithium that would eventually be produced at Zulu. My perspective on it is pretty simple, which is that Canmax and PREM will come to a new deal very shortly. I said that the entire way through, all the way from 1p or all the way down to 0.23p or wherever it went to, and back up to about 0.5p where we are now. George has intoned it in interviews, in an interview with you recently, actually, but also in a recent RNS, where he made it clear that the board were very close to a new deal. I suspect that this deal, when it comes out, will be more advantageous to Canmax than previously, given that PREM missed a few deadlines. And I think there are going to be elements of it which perhaps PREM shareholders are not going to be happy with. But I think that Canmax will bring more money to the table to fund OPEX costs and potentially to build more plants. And I think my basic perspective on it is that it's going to be a year or two where PREM is going to be paying money back to Canmax for the prepayment amount, the initial one that they have, also more money that Canmax is going to bring to the table now. But thereafter, they'll retain 100% of the Zulu project. They'll get the EPO license. They'll get resource upgrade statement. They'll build more plants. They've got the partnership with Li3. By the time we come to this point next year, I think the share price, and again, this is not financial advice, just my opinion, but the share price will be well over 1p. You've only got 7 or 8 SC6 or spodumene producers in the world. PREM is about to be the 8th or 9th of them, depending which one wins the race. And my concern is that you have a large number of people who are very stressed about the short-term financial situation. It is true the company is financially constrained, but I am 100% confident that the plant that Stark has developed will work as intended by the time we come out of the force majeure in less than 3 months' time. I'm 100% confident that the share price will rise at that point, and I'm also confident that Canmax, which is absolutely desperate for any sort of lithium supply, will come back to the table. On that, I think a lot of PREM investors are kind of hyper-focused on this little plant out in Zimbabwe and don't really completely understand the wider picture. Canmax has an agreement with Pilbara Minerals to get SC6 from Pilbara, but that agreement concludes in 2025 because Pilbara is building its own plant to process its own lithium and doesn't want Canmax to do it anymore. Canmax also has an agreement with AMG Lithium, which is based in South America, but AMG from 2025 again will be sending all of its lithium to Germany. So that contract is going to be out. And essentially every other source of lithium that Canmax has, it's either exploratory producers like Pulsarate in Zimbabwe or Global Lithium, which are just all at the exploratory stage. It doesn't have any source of lithium coming in from 2025 other than at PREM that I know of that they've made public. Okay. And therefore, even though they're a massive company and lithium is only a small part of what they do, they are hugely incentivized to come to a deal with Premier African Minerals. And I suspect, for example, they'll want 100% of the offtake rather than 50%. I suspect they'll want it at a slightly cheaper than market prices for a couple of years, say. I think they may want more shares. I'm not 100% sure. But I do think that a deal it's almost inevitable that it will be struck. And when I said this, when the share price was trading at sort of under 0.25p, and there was all the fear in the markets, and everyone was panicking and stressing out and selling out of their positions, I got a lot of hate for it. And now it seems to be the case that this deal is going to go through over the next few days.
I would certainly imagine so. Like you say, I think Canmax need, what you just said, they need the lithium, that need the supply, don't they?
They need it. They
demands.
They signed a deal with Ford, right?
Yeah.
Which essentially to supply an X amount of lithium at Y price, and they've signed this deal. They're planning to deliver it from January 2025, which is the exact same point that every single one of their current contracts runs out. I don't think they have a choice other than to exit the Ford deal, because it's not like the tin market where you can just open another tin mine, right? No shade to Andrada Mining. There's plenty of tin opportunities in the world. And it's not like the gold market where gold is high, but actually new mines are discovered all the time. And it's not like oil, again, where there's new wealth. There's only so many sources of high quality spodumene in the world. Very few of them are on the verge of production. PREM has it. It's an incredibly valuable resource. And if Canmax were to say, right, fine, we will leave, PREM would have absolutely no trouble whatsoever in finding a different partner, as George intoned in previous interviews.
Indeed he has. People, lots of, I think, well, I asked him once and he sort of counted very quietly. It's a famous clip that I think people have cut out, and I think maybe there's 6 or 7.
7 or 8. Or something along those lines. I mean, the thing is that I cover the lithium. I've covered the ASX lithium producers for IG Index for a couple of years, and for other providers before then. And I think that perhaps many investors don't quite understand that the idea is that every new car in the world by 2035, 2040 is going to be an EV, and they all need lithium. And there's nowhere near enough lithium at the moment for any of the EVs or any of the green technology that is currently being planned. So the idea that Canmax are going to leave is just ludicrous. What Canmax want to do is secure supply. They're not like, I think $35 million repayment to a penny share, like PREM, is a large amount of money. To a company like Canmax with billions of dollars and the Chinese state at its disposal, it's just nothing. And getting that security of supply is top of their agenda. So I suspect they'll want 100% of offtake. And I also think they'll be quite happy to fund plants at Ally Free Lithium, Mutare, which PREM has a 50% shareholding of. And then, as well as that, further pilot plants on the Zulu EPO, which again, we've only drilled a very small part of it, but it's like half the size of London, this project. It's absolutely massive. And I don't think many investors grasp just how incredible an opportunity this is. And I say this as someone, I covered Pilbara Minerals in the years in the run up to obviously it's trading for $5 Australian dollars at the moment, I think. And when it started producing, it was trading for 60 Australian cents. A year later, it was down to 15 Australian cents, and then it bounced back up to $5. So people talk about, oh, I wish I bought early in Pilbara Minerals. I'd be making so much money, X, Y, and Z. But actually, those early investors, and I include myself in them, had to wait. Even after it started production, you had to sit out a 75% drop in the share price before it bounced back. And with Premier African Minerals, exactly the same thing. As you say, plenty of people trade this share and go up and down. I haven't sold any shares. I've topped up over time and I've bought more. But I think when you're trading a share as volatile as PREM, at the moment, for example, you are taking a very big gamble, because Canmax signs the deal, the plant is fixed, we start the first sales, could happen with all of that, could happen within the next 2 to 3 months. And then suddenly you have a company that's worth 2p a share quite easily.
Well, you mentioned earlier about the shareholders might not be so happy with certain elements of a new deal with Canmax. What do you think Canmax might do to try and better their position and perhaps limit the sort of the upside to PREM?
Well, originally the idea was that that there would be a lithium hydroxide sharing arrangement, and then when Premier African Minerals rejected the essentially the new deal that was proposed at the last minute, which was selling lithium at set prices that couldn't take into account the changing, fluctuating costs of running the plant, like diesel, for example, and then on top of that, selling all of the lithium at the project. I mean, the thing is that Hamax are not going to get everything that they want, but the reality is that PREM is constrained for money, so there is going to be a certain element of compromise. For example, at this special general meeting that we're about to have, shareholders being asked to introduce potentially up to 5 billion new shares. They're held in treasury. They won't be placed straight away, but George will have the rights to dilute the company by shareholders by about roughly 20% or just over. So Camax may ask for new shares. Some of those new shares, for example, at a premium. So Camax might say, okay, right, we want more of the shareholding in the company, but we'll buy those shares at a premium to the market price.
So and then they'll have they can hold their position as it is.
Of course. So they can, or alternatively, they might say, we want 100% of the offtake, not only at this plant, but at any subsequent plants that you build. Or they might say, we're going to go big and we're going to give you $100 million in cash. Go build 3 more plants. Now that Stark is 100% sure, it'll be a lot quicker and a lot easier because they've learned from all of the, well, I wouldn't even class them as errors or mistakes. It's a learning curve because it's a specific kind of ore body and they're building a radical new plant that's going to deliver the goods. And I think that this deal is going to have, the thing is, I don't know. I can't say for certainty what it's going to be, but I suspect there's going to be things in it that will be very good for PREM over the long term. But over the shorter term, you're going to have some shareholders who are not going to be happy. But I think that's the nature of compromise. And I think it's worth bearing in mind that we did say to Camax that we would be able to deliver lithium to them in March 2023.
Yes.
It's now August 2023. We're still in a force majeure and they still don't have their product.
Indeed.
At the same time, George has said that Q1 2024, and it sounds ambitious, you're going to be looking at far more spodumene production than what we had previously calculated. And on top of that, from everything that's coming out of the Stark LinkedIn profile, it looks pretty sure that SC6 is going to get produced.
I'm sure, yes, they are confident they will do it. Absolutely, 100%.
So go on. You have to take a little step back and go, hang on, we've got a functioning plant. We're creating tons and tons of the most valuable mineral resource in the world right now. And we have a partner who's a multi-billion-dollar company for whom the $35 million prepayment is pennies, absolutely nothing. They desperately, desperately want the lithium. And it's just the fact that we are in a weak financial position, so we'll have to make some compromises.
Yeah.
Because the alternative is we say to Camax, okay, don't worry about it. We will sell our other 50% of the offtake to another party who will then give us money to pay you back. And A, it becomes more complex. But B, I think the other thing is, I don't know how to describe it, but if for example, you had Glencore in the area or Rio Tinto, and George was talking to either of those parties, and Rio in particular, especially after its new contract with Ethereum, Rio has made it clear that they're looking for smaller projects to invest in further down the supply chain. They're not going to get into bed with PREM. They're not going to engage. They'll engage, but they won't engage formally with PREM until the situation with Camax is completely resolved one way or another. I think that's the reality because they don't want to get involved in legal wranglings or whatever. What they want to do is say, are you 100% sure that Camax is gone? Or you're 100% sure that Camax is in? Because bear in mind that at present, only 50% of the offtake is due to Camax under the agreements that we have in place. So the other 50% of the offtake could happily go to another company, could quite happily go to somewhere else in exchange for another bunch of cash. And PREM has no money, but has a plant that's on the verge of working and producing spodumene. So it's not like we're in an incredibly weak position. The reality is that we need each other. Camax needs its spodumene to fulfill its forward contracts, and PREM needs some money to make that happen. So I don't know which one of them will choose to shoot themselves in the foot. I don't think they will, and that's why I think a new deal is going to get signed.
Indeed. Well, let's just finish off on Prem. We talked, of course, it's not without risk. What risks would you see here that potentially Stark actually can't get this thing working, or other factors that you're considering?
No risk of Stark, in my view. I'm
Hmm.
100% confident that the plant will work. The risks factor, well, you're in Zimbabwe, which is not a particularly, it's not a tier one jurisdiction, let's put it that way.
Hmm.
You're dealing with lithium, which is a complex mineral to mine, to store, to transport, as Stark, already knows, but has learned more to its cost because it's funding most of the upgrades. You're dealing with a penny share, it's an AIM share. So as a long-term investor, you have to be able to ride that volatility. And if you're trading this stock, God help you, because you can make profit potentially, but it's all over the place on a day-to-day basis. But I think the key risk at the moment is the short-term financing. George has obviously put up 1.7 million pounds of his own money through Prem shares. CanMax will come to the table, in my view, and give Prem the money it needs to get over the line. And then the real risk, really, the only real risk that I see is the fact that you're in Zimbabwe. This is Africa, and you can have regulatory change that just comes at you from nowhere that you have to adapt to at the time. With Zulu, even with RHA Tungsten, which is another Prem project, which is essentially that one of the problems that contributed to that project not working out was last minute legal changes. I don't think that'll happen with Prem or with
Okay.
Zulu, given the $1 billion of Chinese investment, but it is something that you have to be careful and watch out for.
Okay. Okay. Excellent. Well, thank you, Charles. That we've spent a fair bit of time talking about Prem there.
Indeed.
We do want to cover a couple of other companies in the time that we have, and we're sort of moving up the risk, or going down the risk curve, whichever way you want to describe it. But Kodal Minerals is that we're sort of talking Prem is maybe we'd call high risk. I wouldn't say it's extremely high risk, but it's the highest risk we're talking about today. And Kodal you would describe as more of a medium risk stock. So I don't know. I'll be honest. I don't know a lot about Kodal. So I wonder if you want to enlighten me, tell me a bit about it, and we can have a
Sure, no
discussion.
worries. I wouldn't say that Prem is massively high risk, but I think the key
Mm.
thing to understand is that Prem has 100% of the Zulu project and has gone for an offtake and prepayment agreement, which is a higher risk agreement. Whereas Kodal Minerals agreed in the 17th of January of this year, made an agreement with Highland Mining to essentially give up 50% of the Buguni project that it has in Mali in exchange for $117 odd million. And the key difference is that with Kodal, you have a real partner that's 50-50 in with you the whole way. Whereas with Prem, what you have is an offtake agreement, which is just not quite the same level of closeness.
Yeah.
So with this particular deal with Kodal received a $7 million deposit, I think, in January or February this year. They recently received a $3.5 million top up, essentially a good faith payment. You've had 6 or 7 months of delays to getting this deal that they've agreed signed. But I think you have to view that in context. So the deal next door to Kodal's flagship Buguni is Gulamina, which is a lithium project which is operated by Leo Lithium and Ganfeng. And when they signed their own deal, it took about 6-7 months to get that contract through as well. With Kodal, I've been following and covering it briefly, but you've had a new minister of mines. They're reviewing the mining code. There's in Mali there's a lot of civil problems, and then on top of that, you're having government changes as well at the top all of the time. So all of these things are adding up to the delay. I think this most recent $3.5 million payment is essentially both companies saying we will definitely get this deal signed, which will hugely de-risk Kodal. However, we are not certain when it's going to be signed. It may be a couple more months from now and not meet the new end of August deadline that they've created for themselves.
Okay. And when would you see? I mean, do you hold shares in the company first of all? I should say.
Yes, I hold shares in Kodal. I've held
Okay.
shares in Kodal since a few years now. A few years.
A
I've
few
been
years.
topping up as we get. Well, the thing is, I called the lithium peak and the critical minerals supply gap years and years ago. And you can Google my name, you can find my early work from 2016, 2017. And I was saying, look, the world is going to run out of oil. There's going to be electric cars is going to become a thing. there is nowhere near enough lithium in the world being mined or being explored right now to make that happen. And therefore, lithium is going to come right to the top of the agenda. And for example, I think we're going to see exactly the same with copper, nickel, uranium. All the countries in the Western world are starting to wake up to the fact that they're relying completely on China, which is not a 100% certain trading partner. But Kodal, I think, now having agreed this deal with Hainan Mining, I'm absolutely certain that the deal will go through. But I do think that when you're operating in Mali, you have to be prepared for massive, massive government delays. And this $3.5 million is designed to get the initial, they're already doing preparatory work, but it's getting more of the initial work done. And I think we're going to have a deal signed by the end of the year. But then having said that, I thought that it would be signed back in April. So take my opinion on that, on timelines with a pinch of salt.
Okay, but you're saying that it's slightly less risk than PREM because they have a partner that's committed sort of 50% as well.
It's a 50-50 deal. So the PREM owns 100% of the Zulu project, right? So its deal with CanMax, formerly Suzu TNA Clean Technology, whatever it's called.
Yeah.
That deal is strictly an offtake agreement. And yes, CanMax have roughly 13% of PREM shares. And yes, they have a board member, but it's not the same. With Kodal, it's a 50-50. Kodal with said, right, we will lose 50% of the project. So 50% of this absolutely incredible resource, we're going to give it up to the Chinese. But in return, they're 50% in with us, 50-50. And what that means is that once the deal is signed, it guarantees you that this resource will get mined, that the Chinese will not try to pull one over, for example, on Kodal Minerals, that they will be 100% in all of the way, and that they have 50-50 skin in the game. And I'm not saying this is a better way to do things, because it isn't, but it is a lower risk way of doing things. And you've seen that with PREM. PREM has kept 100% of their resource, but they're now, in financially constrained. Kodal has kept 50% of their resource. And I'm 100% confident that if, for whatever reason, they ran out of money over the next 2 years while they're trying to develop, because their partner is 50-50 in, their partner will stump up the cash to see them over the finish line, if that makes sense. Whereas with CanMax, because they're not 50-50 in with Zulu, they see it as an opportunity to improve their own position rather than being equal joint venture partners.
Okay. And you're saying that with Kodal, a deal needs to be signed, and then it can move on.
Yes.
Okay.
Yeah, essentially. So the deal was agreed in principle in 17th of January of this year. Hang on just 2 seconds. Yeah, so the deal was agreed on 17th of January of this year. And then a deposit was paid, and then a good faith payment a few days ago. And essentially, we've now got to the point roughly where a deal should now be signed essentially any day now.
Okay.
But you do have a lot of problems going on in Mali. I would not problems, just changing government structures that means that the delay may be a little bit longer.
Okay. And once that is signed, then that would mean the project can start moving towards production.
So yes, indeed. And I think it will take sort of a year or a half. But as we know from PREM, saying how long it'll build a plant, but how long it will actually get there. It is a little bit different because there's a project next door, which is a lot further advanced. So they might be able to make use of excess capacity. But the key thing for me is that I think Kodal's trading for around 0.5p a share. Once that deal is signed, it'll go straight up to 1p, and then it'll stay around that level because the risk is then essentially gone.
Indeed. And the market cap of Kodal at the minute is what?
Kodal's market cap, just 2 seconds. I want to get the exact number because, of course, it changes on a minute. 84.5 million. So yeah, it's trading for exactly 0.5p. But the second that deal is signed, I'm confident it'll go back up to 1p.
That unlocks the value to go forward.
Yeah, so I think the market cap will jump up to 170 million. I'm confident that it will happen, but again, not 100% confident, and that's the purpose of diversification.
Indeed.
Also, you're operating in Mali, which again is not like Australia. which Greatland Gold, that's their advantage, which I think we're about to talk about.
Yes, indeed. Australia, of course, the jurisdiction where it's much easier to do business, of course, with Greatland Gold there. So,
yes,
Greatland Gold, well, I mean, that was a fantastic story going back a long time. I think if I'd had continued to hold I think I put in £2,500 worth of shares, sold them at nearly double at 5,000, really pleased with myself, needing the money for some commitment. If I'd have continued to hold, I bought them at 0.4, I think, 0.38 from memory. Yeah, been worth an awful lot more, like, probably 200,000 or something, probably.
Well, I think it's hindsight is a wonderful thing.
It's a wonderful thing, isn't it?
I don't trade. I only buy shares for the long term. Premier African Minerals, for example, and Kodal. I have those shares. I won't be selling them until either the assets are sold or the company goes to a ridiculous valuation and I can retire. Okay. With Greatland Gold, this is a different kind of company in that I don't believe it's high risk at all, because you're operating in a tier 1 jurisdiction. You're in Australia. You have all this great infrastructure, really, really well qualified people surrounding you, millions of other projects around. Greatland Gold, obviously, its flagship is Havieron. They own 30% of the economic interest and their major partner is Newcrest. But Newcrest and Newmont are merging now to form the world's largest gold titan. And I think the key thing here to understand is that the share price is now trading around between 7 and 8p consistently. Investors, I have a small number of Greatland Gold shares, but I'm waiting for the company to get closer to releasing their definitive feasibility study on Havieron. Because when that comes out, I suspect it'll be an absolute monster. The share price is going to absolutely rocket. And this, again, we were talking about risk because they're in this partnership with Newcrest Newmont. There's a Telfer operation nearby, which is going to massively reduce the capex costs. This site will 100% be developed and Greatland will make a massive amount of money. I'm confident of that. Having said that, they only own 30% of the asset. And this is the thing. With PREM, they own 100% of the asset and they've gone on a high risk route. Kodal, they own 50% of the asset. They've gone on a medium risk route. Greatland Gold, they own 30% of the asset, but there's very low risk. And then on top of that, Greatland is exploring a lot of its tenure in Australia in a joint venture with Rio Tinto. And then it's got loads of other projects on the side. So I think Greatland is undervalued at the moment. But I think the share price will continue to drift slowly downwards because investors, I think this is essentially the definitive feasibility study, I think, is not too far away, but it still probably will be several weeks / months. Okay. And therefore, as an investor, you can put your money to better active use elsewhere. This is not advice, by the way, and you do run the risk of it being released tomorrow. but you can put your money to better use elsewhere. And when it comes closer to, hints coming out that the DFS is going to get released, you can then buy shares then. So I suspect it will continue to trundle along. And then very suddenly there'll be a massive surge upwards when the DFS is about to be released. And then when it is released and it proves the economic viability, which of course it will, the share price will absolutely rocket. But that's, just a prediction. I could be completely wrong. I'm not usually, but I am sometimes.
Well, of course. But I mean, of course, it's come off a fair bit, hasn't it, from its peak of around 40p. It was nearly $1 billion, from memory, £1 billion company.
Yeah, of course it was. But, that was a ridiculous valuation at the time for the company that it was. I think it's worth bearing in mind that this is it, like with Kodal Minerals, I think it will do something similar. The deal will get signed and the risk will come off, so the share price will rocket. But then somebody is going to realize, and by somebody I mean me. I mean, I won't sell because I'm not someone who buys it. Once I'm in, I view myself as an owner of the business. But I suspect what will happen with Kodal, the share price will rocket after the contract is signed, and then somebody will point out actually it'll be about 18 months, say, maybe a little bit less, maybe a little bit more. It'll be to get anything out of the ground, to get any production going. So yes, you've got this deal signed and the company is de-risked, but you're not going to get any revenue going for about a year and a half. And then the share price will kind of stagnate because investors will go, well, it's not going to go up from where it is now. I'd rather take my money out and put it to better use elsewhere. And with Greatland Gold, I think this will be exactly the same. They'll release the DFS on Havieron. And the good news is, because they have the processing plant of Telfer so close, like as in very, very close to the project, it's not going to be like as the same as with Kodal, because, again, this is the benefit of being a tier 1 jurisdiction like Australia, because they can dig the ore out of the ground and then send it over to Telfer for processing, and they don't even need to build their own plant to get revenue running and going. So the shares will kind of trundle along, the DFS will get released, and then it'll prove economic viability, and all the investors will come back in, and then Greatland will be able to mine the gold and make loads of money, and it'll be great. I mean the other thing, sorry, what were you going to say?
I was going to say, what a great opportunity to get back in, to have more value in Greatland. It was talked about before. When I bought the shares, you think, oh, okay, well, that's not worth going now. You still think there's, how much upside would you say? I mean, what could the market cap be?
I think 2 years from now, it's trading for about 7p. So I say 2 years from now, it could go up to 28p, so 4 times. But I think, I think so. I don't think it's unreasonable, but I think that it's one of those shares where it is just going to trundle along until the DFS gets released and slowly drift downwards, which is why I'm waiting. I feel I'm not stressed, but I'm waiting for it to continue to trundle downwards, because investors aren't really, because there's no news stream. I think is the key thing. There's not until that the only thing anyone cares about is that key study coming out, right? That proves that their flagship project is going to make loads of money. We already know that it will. Every time they come close to it, they then do another incredible drill result where they go, hang on, we can improve this asset even more. So if you're investing it over the long term, perhaps not people who, at the very, very top, but if you've held shares in Greatland for the past few months and you're thinking, oh, it's just not really going anywhere, well, it will eventually. It will definitely go somewhere. And the only question is at what point that study is going to get released, because the second it does, they'll then dig out the ore, send it over to Telfer for processing, and make tons of money. I mean, one thing I do find interesting is with the Newmont-Newcrest tie-up and with the joint venture with Rio Tinto, where the Greatland is going to come up with a plan to acquire 100% of Havieron and get access to the Telfer plant. I have speculated on this in the past, and I think given the investors that they have on board, Wiley Metals, for example, I think that it is something they could go down that route. But I also think that it's a very good thing to be in bed with the largest gold miner in the world, who has a massive economic interest in getting Havieron mined and processed. And if they went down the 100% route, I'm not certain that would be a good thing, because yes, they would make more profit in the long run, but then they would find themselves potentially constantly needing money in the early days, which is not what you want to see. And this is where PREM is now, and where Kodal is not going to be. So I don't think they'll go for the 100% ownership route, but if they do, what it'll do is it'll make the rewards potentially much more promising at the expense of much higher risk.
And what would be your outlook on the gold market? Because, of course, a fair bit of the value there in Greatland Gold is probably dependent on how the price of gold performs.
Well, I'm trying to think of the words. I need to shoot off in a second. Sorry, Mark. But with gold has come down slightly off its top. But the basic point with gold is that gold has an inverse relationship with the US dollar, right? So as the interest rates rise at the Federal Reserve, it makes the dollar more attractive, and then it reduces the value of gold. Now that interest rates are almost at their peak, and yet we're still probably going to enter into this global downturn, I think gold is going to see another record high over the next year or so. Okay. That's my view.
That can be a discussion for another podcast. We've talked probably a lot about gold and the gold market, but I do appreciate very much your time today, Charles. Thank you very much for joining me on the podcast, and let's speak again in the not-too-distant future.
Yes, let's do. Bye, Mark.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. Tune in next time.